So last September, in a webinar that was hosted by NinjaTrader, I published the turning times and dates, rather, for gold futures on a daily chart. You can see in my chart here that I have future dates, for example, December 4th, December 31st, and February 6th. They are expected to be buying times and dates where prices are expected to rise. The blue signals on December 18th and January 28th are the times that the software has found over about 10 years of behavioral patterns and moves studied are historically selling dates. And what I found was really cool. I went back and I looked at the actual results from these charts. If you had bought on the 18th of August and sold by the 8th of September, it was a $309 move. And then you can actually see in here where these banks were taking profit. It was like a rest area for the next published time that was nearly a year in the future from that NinjaTrader event. Here, September 24th, we were expected to rise higher until October 14th. That was a $419 move. And they were a little late to the selling part of that, and you can sort of see this real impulse-driven, kind of panicky, volatile reversal that eventually dropped us back down into the 27th. And I was paying close attention to the signal on the 27th because this is the one we've been most recently watching. Is the run on gold over? Is China, is Russia, are all these other countries done buying physical gold? And the answer is no, they're not done. I was nervous at first. I'll confess, I wasn't sure what was happening in here. We were kind of chopping back and forth and not really advancing. And when I was studying it, I was paying very close attention to this wedge, right? And then right here on the 10th of November, the wedge was defiled. And up we go. And so it's now the 12th of November. And on the close of today, if we keep track of that result, it's only been a $187 move. So this may be the petering out of gold. When you see that the move before was bigger than the second move, we may see that the gas is sort of leaving the institutional engine. And this could be an early warning sign that a low-risk put or short opportunity in gold is coming up.